All right, you ready for a deep dive? Swiss stablecoins, specifically something called Frankencoin. CHF, not the monster. This thing is making some serious waves in DeFi, and the stack of articles and research we've got, even some spicy YouTube interviews hint that something big is brewing. Think Swiss stability meets that cutting-edge crypto innovation.
Yeah, it's a fascinating convergence, for sure. You've got that rock-solid reputation of the Swiss franc, blending with DeFi at its best.
Okay, so yeah, everyone knows Swiss francs are considered a safe haven, but what makes them so special? What's the secret sauce?
Well, a long history of stability, for starters. I mean, Switzerland stayed neutral through all those global conflicts. They've also got this really strong and diverse economy,
Yeah.
focused on tangible industries, pharmaceuticals, high-tech manufacturing. And believe it or not, a bit of boringness actually helps.
Warring is good when it comes to money. I gotta hear more about this.
Absolutely. Minimal political drama, no sudden policy shifts. That Swiss consistency is super attractive to investors looking for a safe haven, There's just less perceived risk, especially compared to other economies.
So it's like that friend who always has their act together, no matter what kind of craziness is going on around them.
Precisely. And if you need mathematical proof, the Swiss franc has appreciated over 80% against the US dollar in the past 50 years. Talk about hard currency status.
Okay, so the Swiss franc is the strong silent type, but where does Frankencoin fit into all of this? It's not just pegging crypto to the franc, right?
Right. It's way more nuanced than that. Frankencoin is set up as a CDP, a collateralized debt platform. It's similar to MakerDAO in concept, but with a fascinating twist.
All right, let's unpack that a little bit. CDP Maker DAO, break it down for me.
Okay, so imagine depositing collateral, like Bitcoin, Ethereum, even Curve tokens, CRV, and borrowing Swiss francs against it. But here's the really interesting part. Frankencoin uses an Oracle-free design.
Oracle free? That sounds intriguing. Most DeFi platforms I know rely on oracles for pricing, don't they?
You're right. Most platforms use oracles. Essentially, they're third-party data feeds to figure out asset prices, especially for liquidations, which happen when your collateral's value drops and can't cover your loan.
So the oracle is like the judge, deciding if you're in trouble or not. What's the advantage of going oracle free?
Well, Frankencoin leverages a unique liquidation system. Research shows that being the second to liquidate in a crash often leads to worse outcomes than being a bit slower.
So if everyone's panicking and selling, it's better to take a breath and wait for the dust to settle.
Exactly, by eliminating the need to be the fastest to liquidate. Frankencoin removes the need for oracles completely. It makes it more decentralized and arguably more robust. Remember, oracles can be points of failure or even manipulation.
So less reliance on those outside sources.
Yeah.
I'm also seeing this theme of Swiss law being very crypto-friendly. What's the deal there?
You're onto something. Switzerland actually allows equity to be issued directly as tokens, thanks to their blockchain law. You could own a piece of a Swiss company on-chain with the same legal rights as traditional shareholders. That's massive for bringing real-world assets into DeFi.
So Frankencoin could potentially be backed by pieces
Yeah.
of the Swiss economy itself. So that's a whole different level of stablecoin.
Precisely. It's a shift away from crypto-backed stablecoins towards a system representing a nation's entire economic power. That's one of the things that makes Frankencoin so unique and potentially revolutionary.
Okay, Swiss stability, this oracle-free design, real-world asset potential. But what about the people behind it all? Is this a community-driven project?
Absolutely. Frankencoin uses a unique model called negative governance. Anyone can propose changes to the protocol.
Anyone. So like I could submit a proposal.
Yes, even you. However, a small percentage of long-term FPS holders, that's Frankencoin pool shareholders, have the power to veto any proposal. This system prevents rushed or reckless changes and encourages well-thought-out, long-term decision-making.
Sounds very Swiss.
Exactly. It's all about stability and careful deliberation, much like Switzerland's approach to, well, pretty much everything.
This all sounds incredible, but every superhero has a weakness, Ryan. What hurdles does Frankencoin face?
Well, one challenge right now is integrating Frankencoin into popular payment gateways and building fiat on-ramps, basically making it easy for people to get their hands on CHF.
Because even with amazing tech, if it's a pain to use, it won't gain traction.
You get it. That's where the Frankencoin Association comes in. They're a group of Swiss entrepreneurs dedicated to Frankencoin's success, self-funded, not relying on the protocol itself. They're actively working to expand Frankencoin's reach and usability.
So they're like Frankencoin ambassadors, paving the way for wider adoption. What kind of group are they? A whole army of Swiss financiers.
Actually, they're relatively small, but don't let that fool you. They're incredibly well connected in Swiss finance. We're talking some serious players. in the Swiss crypto and blockchain scene.
Small but mighty. Very Swiss. We've talked a lot about Switzerland. But why should someone say, here in the U.S., care about a Swiss stablecoin?
Excellent question. It goes back to that Swiss franc strength and stability. In a world where the U.S. dollar is facing challenges, inflation, geopolitical risks, potential policy shifts, the Swiss franc offers a proven alternative.
A hedge against uncertainty. A way to diversify and potentially protect wealth.
Precisely. Frankencoin offers a way to tap into Swiss stability within the DeFi space, which is usually dominated by dollar-pegged stablecoin.
And with its unique features, the Oracle-free design. Potential for real-world asset backing. It's not just holding a stable asset, it's participating in a system that embodies Swiss values.
Yeah.
Of decentralization and resilience.
Exactly. Frankencoin offers a different perspective on what a stablecoin can be. And that's worth paying attention to, especially if you're looking for alternatives to the status quo.
This is making me think. We talk about DeFi being global and permissionless, yet it's very US dollar-centric.
You've hit on an important point. The vast majority of stablecoins are pegged to the US dollar, which, as we've discussed, isn't always the most stable option.
Frankencoin is like planting a flag in DeFi territory and saying, hey, there are other ways to do this.
I like that analogy. And it raises a question. If the Swiss franc can make this impact, what other national economies could benefit from a similar approach?
Right. A Japanese yen stablecoin built on similar principles, a Singapore dollar stablecoin, the possibilities are exciting.
Absolutely. Frankencoin might be the first, but it certainly won't be the last. This could be the beginning of a new wave of stablecoins, representing more than just the US dollar.
Frankencoin. It's a statement. The future of DeFi might be a lot more diverse and interesting than we imagined.
Couldn't agree more. It's a reminder that innovation can come from unexpected places. And there's always more to explore in DeFi.
You know, for something called Frankencoin, this is all feeling very elegant, like a perfectly crafted Swiss watch. Precise, reliable, and even a little bit beautiful.
You're right. There's an elegance to how Frankencoin blends Swiss financial tradition with cutting-edge DeFi tech and community-driven governance.
They've taken the best of both worlds and created something truly unique. Speaking of unique, what about the Frankencoin pool share, or FPS token? It's the governance token for the whole system, right?
That's right. The FPS token gives holders a say in Frankencoin's future direction. It's how the community governs the protocol.
So it's like having voting rights in a company. The more FPS you hold, the more influence you have.
Exactly. And, as we discussed, Frankencoin uses negative governance. Anyone can propose changes. But FPS holders have veto power. It's about checks and balances to ensure the system stays stable and secure.
I love that. Instead of rushing into things, it's let's think this through. Consider all angles and make the best long-term choices. Very Swiss.
It's a refreshing approach in a world that often moves at warp speed.
Tell me more about this FPS token. How does it work? Where do you get it? What can you do with it?
The FPS token is minted and redeemed by the protocol itself, not bought and sold like a traditional token. It's done through a mechanism called equity reserves, which is essentially all the money that has flowed into the Frankencoin system.
Wait, minted and redeemed by the protocol. So there's no order book on an exchange where you buy and sell FPS?
That's correct. You interact directly with the Frankencoin protocol to mint or redeem FTS tokens.
Whoa, that's different. So how is the price determined? Is it set by the Frankencoin team?
Not at all. It's determined by a formula. That takes into account the total equity capital of the system.
Equity capital. So that's the money people have put into Frankencoin.
Yeah.
Plus any income it generates, right?
Exactly. It's a measure of the overall health and strength of the Frankencoin ecosystem. And the market cap of the FPS token is hard-coded to be 3 times the equity capital.
3 times. Why that number?
It's based on an economic theorem that ensures there's always liquidity for FPS tokens. It might sound a bit arbitrary, but it works well in practice.
Okay, I think I'm following. So I can always mint or redeem FPS tokens at a price tied to the overall health of the Frankencoin system.
You got it. This system guarantees liquidity and makes sure the FPS price reflects the underlying value of the Frankencoin ecosystem.
It's not about speculation or hype, but about being part of a system built for the long haul.
Exactly. It aligns incentives and ensures that everyone holding FPS has a stake in Frankencoin's success.
Speaking of aligning incentives, these YouTube interviews mention a 5% yield on Frankencoin savings. Where does that come from?
That yield comes from the interest paid by borrowers on the platform. Depositing your Frankencoin into the savings module essentially means you're lending it out to those paying an interest rate.
So it's like a traditional savings account, But in the DeFi world,
Precisely. You earn passive income on your Frankencoin holdings while contributing to the liquidity and stability of the ecosystem.
and this 5% yield, is that fixed or can it change?
It's actually determined by the community through governance. They can adjust the savings rate via a voting process.
So the community has a say in how things work. It's not just set by the Frankencoin team.
Exactly. It goes back to that core principle of decentralization and community ownership.
Okay. This innovative stablecoin tied to the Swiss franc, a unique governance model, and a passive income opportunity. It's all starting to click. How does this play out in practice? Can you walk me through the Frankencoin app?
Absolutely. Let's fire up the app and take a look.
Seeing is believing, right? Let's dive into the Frankencoin app and see how it all comes together. All right, so we've got the Frankencoin app fired up. First impressions. It's definitely not one of those DeFi interfaces that makes your head spin.
Yeah, you're right. It's clean, user-friendly, and designed to be intuitive. Even for someone new to DeFi, it's easy to navigate.
I like it. So walk me through this. What are we looking at?
The app is divided into three main sections: borrow, save, and equity.
Okay, let's start with borrow. That sounds intriguing.
This is where you go to mint fresh Frankencoin. You select the collateral you want to use, and you're good to go.
And look at these options. Bitcoin, both wrapped and native CBTC. Ethereum, even Curve. That's not something you see every day in DeFi. Not every protocol accepts Curve as collateral, right?
You're absolutely right. That's a key advantage of this Oracle-free design. It expands what can be used as collateral, bringing in a wider user base and opening up new opportunities for innovation.
I see where this is going. So let's say I'm feeling bullish on Bitcoin, and I want to mint some Frankencoin against my stash. What happens next?
You'd simply choose the Bitcoin option and enter the amount of Frankencoin you want to mint. The app will automatically calculate how much Bitcoin you need to deposit as collateral based on the current market conditions.
And I see this slider for loan maturity. What's that about?
That lets you choose how long you want to borrow for. A shorter term usually has a higher interest rate, and a longer term comes with a lower rate. It's all about giving you flexibility and control over your borrowing.
So for the long game, I can lock in a lower rate. If I just want a quick boost, I can go for the short term and pay a little extra. That's handy. What about risk management?
You'll notice a section where you set your liquidation price, the Bitcoin price at which your collateral would be automatically liquidated if things take a downturn.
Right. We talked about that. But remind me, how does liquidation work in an Oracle-free system?
If the price of Bitcoin approaches your liquidation price, anyone can challenge your position. They're essentially betting that your collateral isn't worth what you say it is.
Okay, so someone calls me out. What happens then?
You have two choices. You can defend your position by buying back the challenged portion of your collateral at the liquidation price, essentially proving them wrong.
Put my money where my mouth is. What if I choose not to?
Then an option is initiated. But here's the unique part. Frankencoin uses a reverse Dutch auction.
Reverse Dutch auction. I'm not familiar with that one. Break it down.
The price starts high and gradually decreases until someone buys the collateral. This ensures the collateral is sold at a fair market value, even if the market's volatile.
So it protects both borrowers and lenders. Interesting. This is a pretty sophisticated system.
That's the Swiss mentality for you. Meticulous planning and attention to detail.
Okay, we've covered borrow. What about this save section? This is where that passive income comes in, right?
Exactly. Once you've minted your Frankencoin, you can deposit it into the savings module in this section.
And watch my Frankencoin grow. Tell me more.
You start earning a 5% annual yield, paid out daily. It's a simple and secure way to earn passive income. On your stablecoin holdings,
It's like a high-yield savings account. But in the DeFi world, with way better returns.
and since the yield is generated from borrowers on the platform, it's directly tied to Frankencoin's growth and usage. More people borrowing and using Frankencoin means higher demand for savings deposits, potentially leading to even higher yields over time.
So it's not just a fixed rate. There's potential for it to grow as the ecosystem expands.
That's the idea. Borrowers get access to liquidity, savers earn passive income, and the Frankencoin ecosystem becomes more robust and sustainable. Everyone wins.
This is making me rethink my whole stablecoin strategy. Why would I settle for those tiny returns in a traditional savings account when I could be earning 5% or more with Frankencoin?
It's not just about the yield, though. It's about participating in a system that reflects certain values: decentralization, transparency, and commitment to long-term stability.
Okay, borrow and save. Both very cool. What about this equity section? Is this where we see the FPS token in action?
You got it. Here's where you can mint or redeem your Frankencoin pool share tokens. You can also see all the key metrics of the Frankencoin ecosystem, like the total equity capital, the income generated, and the current FPS market cap.
So this is like mission control for Frankencoin.
Precisely. It lets you track the ecosystem's health and growth and participate in the governance process.
Speaking of governance, you mentioned that anyone can propose changes to the protocol. How does that actually work?
It's very straightforward. The Governance tab shows you a list of open proposals. To submit a new one, you pay a small fee in CHF.
Why the fee?
It's there to prevent spam and ensure that only serious proposals are submitted.
Makes sense. What kind of proposals are we talking about? Give me some examples.
Anything from adding new types of collateral to adjusting interest rates or even changing the liquidation process itself.
Wow. So the community has real power to shape the system's evolution. I'm guessing the FPS holders have the final say.
Exactly. Remember, any proposal can be vetoed by FPS holders. It's about checks and balances to ensure the system stays stable and secure.
This is really impressive. They've created something that's both innovative and incredibly well thought out.
That's what sets Frankencoin apart. It's not about chasing trends. It's about building a system designed to last.
I'm sold on the concept. But what about accessibility? We talked about getting Frankencoin onto payment gateways and exchanges. Any progress on that front?
Absolutely. The Frankencoin Association is actively working on this. They're building partnerships with on-ramp providers, payment processors, and exchanges to make it easier to get and use CHF.
They're not just weeding around. They're pushing to make Frankencoin more user-friendly and accessible.
Exactly. They know that adoption is key and are doing everything to make Frankencoin a viable alternative in the global financial landscape.
This is exciting stuff. It's like we're witnessing a new financial paradigm being born, one built on Swiss values of stability, decentralization, and community ownership.
Couldn't have said it better myself.
This Frankencoin deep dive has been a real eye-opener. I thought I was learning about a stablecoin, but I've discovered a whole new way of thinking about finance.
That's the beauty of a deep dive, going beyond the surface and uncovering the layers of meaning that shape our world.
And in part 3, we're going to explore some of the real-world applications and use cases for Frankencoin. I'm really starting to see how this could change things.
We'll also examine Frankencoin's potential impact on the global financial landscape. Could this spark a wave of national stablecoins, each representing its respective country's economic power?
Now, there's a question worth thinking about. Stay tuned as we venture even further into the world of Frankencoin. Okay, so we've covered a lot of ground here: the Swiss franc's legendary stability, the inner workings of Frankencoin. We even took the app for a spin. But where does this all lead? How's Frankencoin going to actually change things out in the real world?
Yeah, that's the million-dollar question, isn't it? What I find fascinating is that Frankencoin isn't just trying to be another stablecoin. It's aiming to build a bridge between traditional finance and DeFi.
Right, it's like connecting two continents that were previously separated.
Exactly. A perfect analogy. And you know, one of the most promising areas where this is happening is real-world assets, RWAs.
Ah, yes, RWAs. We touched on this earlier with the tokenized Swiss company shares.
Exactly. Imagine a world where you can invest in Swiss real estate, or Swiss bonds, or even shares of a Swiss business, all on-chain, and all with the same legal protections as traditional ownership.
That would be a total game changer. It would open up a whole new universe of investment opportunities.
Precisely. And because Frankencoin is built on Swiss law, which is very forward-thinking when it comes to blockchain, it's in a unique position to make this kind of RWA integration happen.
So it's not just about Swiss stability. It's about leveraging the Swiss legal and regulatory framework that makes all this possible.
You're getting it. Think about the implications for Swiss businesses. They could suddenly tap into a global pool of liquidity, raise capital more efficiently, and even streamline their operations through tokenization.
Giving them a serious boost in terms of growth and innovation.
Exactly. And for investors, it unlocks access to a whole new asset class that was previously out of reach.
So it's a win-win-win. Swiss businesses get capital, investors get opportunities, and the Frankencoin ecosystem benefits from increased usage and adoption.
Precisely. It's a great example of how DeFi can create positive-sum outcomes.
Okay, so RWAs are huge, but what about everyday use cases? Can I actually pay for my groceries with Frankencoin?
That's the goal. The Frankencoin Association is focused on integrating CHF into payment gateways and point-of-sale systems.
Because let's be real, if you can't buy a cup of coffee with it, It's not going mainstream.
You're absolutely right. That's why they're working on those partnerships
Yeah.
and making Frankencoin as user-friendly as possible.
You know, in those YouTube interviews, they mentioned a Swiss on-ramp provider called DFX. What's their role in all of this?
DFX is a prime example of the partnerships that are crucial for Frankencoin to succeed. They offer a seamless way for Swiss residents to convert their Swiss francs into CHF with zero fees.
Zero fees. That's a pretty sweet deal.
It is, and it highlights the commitment to making Frankencoin accessible to everyone.
They even talked about a vision for an app where Swiss people could receive their salaries in Frankencoin, earn yield on their savings, and even pay their bills with CHF. It sounds like something out of a sci-fi movie.
It does, doesn't it? But the pieces are already in place to make this a reality.
And with the Swiss QR code payment system, you can even pay your bills with crypto without needing a traditional bank account.
Exactly. Frankencoin could revolutionize how Swiss people manage their finances.
It's like taking the best of Swiss banking, that stability, security, efficiency, and giving it a DeFi upgrade.
It all comes back to that fundamental question. What does it mean to have a stable coin that truly represents a national economy?
Right. It's not just about pegging a cryptocurrency to a fiat currency. It's about creating a system that reflects the values, the strengths, and the potential of that economy.
And in the case of Switzerland, those values are rock solid. Stability, innovation, and a strong sense of community.
Frankencoin is more than just a stablecoin. It's a statement about the future of finance. It reminds us that we have the power to create systems that are more equitable, more resilient, and more aligned with our values.
It's also a testament to the ingenuity of the Swiss people. They've always been known for their ability to adapt, innovate, and thrive in a changing world.
And with Frankencoin, they're once again leading the way in a financial revolution.
It's a reminder that the future of finance isn't being shaped by governments or big institutions, but by communities, innovators, and those who are willing to challenge the status quo.
Frankencoin proves that sometimes the most disruptive innovations come from the most unexpected places. Who would have thought a stablecoin tied to the Swiss franc could be the catalyst for a global financial transformation?
It's a reminder that we're still in the early days of DeFi, and the possibilities are truly limitless.
So what does this all mean for you listening right now? It means the world of finance is changing, and you have a choice to make.
You can stick with the traditional systems, which are showing their cracks more and more each day.
Or you can explore the world of DeFi, where innovation is exploding and new possibilities are emerging constantly.
Frankencoin is just one example of what's possible when we combine the best of both worlds. It's a glimpse into a future where finance is more accessible, more equitable, and more aligned with the needs of individuals and communities.
And that's a future worth getting excited about.
Absolutely. It's a future where stability isn't just a word, it's a reality. And it's a future where anyone, anywhere, can participate in a financial system built on trust, transparency, and innovation.
So keep an eye on Frankencoin. It's not just a stablecoin. It's a signpost pointing towards a brighter, more decentralized financial future. And who knows, maybe one day we'll all be saying, pass the CHF, please.
I'll drink to that.
This has been The Deep Dive, where we take a stack of sources and extract the most important insights. We hope you've enjoyed this deep dive into the world of Frankencoin. And until next time, keep exploring, keep learning, and keep diving deep.